The Allan Australia Equity Fund aims to deliver long-term, market-beating returns through its contrarian investment style. I'm Natalie MacDonald for the Finance News Network. Joining me now is Allan Australia Equity Fund co-portfolio manager Dan Abeshouse. Dan, welcome to FNN.
Thanks very much, Natalie. Glad to be here.
Dan, can you start firstly by introducing the fund?
Allan Australia manages about $3 billion for our clients, and the Allan Australia Equity Fund invests in ASX-listed companies with a long-term investment horizon, and our objective is to outperform the ASX 300 accumulation index net of fees over that 5-year plus period of time. And we do that with an investment philosophy that has three main components. Long-term in its investment horizon, as I said, 5+ years is the way that we approach our investments. Fundamental in nature, and by that we mean that we focus on the fundamentals of the business that we invest in. What do they do? How do they make money? What kind of cash flows do they produce over the long term in our expectation? And most importantly, how does that all relate to the price that you pay for the company today on the market? And thirdly, contrarian. And by that we mean looking for companies that aren't the flavour of the month, that might be out of favour or perhaps even hated by the broader market, because often when expectations are low, that's when you can find rewarding investment opportunities.
And so why do you think this philosophy can outperform?
We find that in the short term, the market can have a tendency to overshoot, both on the upside and the downside. And what that means is that when people are very excited about a company, a sector, when expectations are high, often that can result in the price being higher than maybe it really should be. And conversely, for companies that are out of favour, which are not the flavour of the month, we find that sometimes that can present opportunities to invest at a price that's more attractive than what you would expect it to be. And then over the long term, if you're patient, if you're willing to stay the course through the rough periods, we would expect that things will revert to a normal situation, and the companies that you bought into at those depressed times will be rewarding investments. And in fact, if we look at our experiences over time, that's proven to be the case.
So Dan, you say this strategy has been proven over the long term. How long have you been running for, and what has performance been like over that time?
We've been offering the fund in Australia since 2006. And we've outperformed our benchmark net of fees over that period of time by about 1% per annum. And in fact, if you look back just a year ago, that number was 2% since the initial launch of the fund, which indicates that you can have some short-term variation. And in fact, the last year for us has been quite a big variation compared to the benchmark negatively. And that's par for the course of what we do. If you're trying to outperform the index, you have to look quite different to it in the composition of your portfolio. And in our case, over the last year, that's meant that some of the companies we've been in, like Woodside, Origin, Metcash, have had a harder time. But conversely, that's often the times when it's most exciting to be investing.
Dan, there are miners and energy companies in the top 10 stocks, sectors which are really disliked at the moment. Can you tell us perhaps why you hold these and what your performance outlook is for these sectors?
The mining and energy stocks have definitely had a very tough 12 months. As you would expect with our investment philosophy, that's where we've been focusing our attention. And so companies like Origin Energy, Woodside Petroleum, as well as some gold mining companies, Newcrest Mining, aluminium mining companies like Alumina, all feature in our top 10 stocks. And for all of these companies, the interesting thing is that they continue, even at a low point in their cycles, to produce very strong cash flows and generally have good long-term reserves that are at the lower cost end of the cost curve. But if you're patient and wait for the cycle to normalise, you might find that picking those companies up today is actually good value. And that's what we expect to see over a longer term horizon.
So last question then, Dan, who should invest in this fund?
We think that the fund is suitable for anyone who wants to invest in Australian shares, but is looking for a return that is superior to the market, and the way to achieve that is by having a fund manager who will actually have a portfolio that looks very different to the market, who has a long-term approach and who's willing to be patient and not follow the herd, and over time produce that better return.
Dan Abeshouse, many thanks for the update.
Thanks very much.